essence, when you own a home, you are controlling a very large asset, often multiple hundreds of thousands of dollars for a relatively small amount of cash out of pocket comparatively. For example, if you buy a $400,000 home and you put 5% down, which is 20%, and it appreciates at 5% in just 1 year, which is not unheard of by any means, especially here in Chicagoland, you have now gotten in 1 year a 100% return on your money. That is nearly unheard of. You also had a place to live in the process. One of the most overlooked benefits when you look at purchasing a home versus renting is the stability of payments. And this is something that you don't necessarily feel in a year or two, but you do feel it over time. So here in Chicagoland, if you are going to rent a home, you can expect anywhere from a 5% to a 10% increase on your rent year over year, typically speaking. On the flip side, when you purchase a home, you are locking yourselves into a 30-year, typically fixed rate mortgage, which means that your principal and interest payment isn't going to change for the next 30 years. Now, you will have some small fluctuations in things like taxes and insurance, but it's not going to be this compound effect the way that it would be on a rental. When you zoom out and you look at the fact that you buy a home, a lot of people will purchase their first home when they are in the beginnings of their career, and their payment stays pretty stable, but their income increases over time. That's how you start to see a huge gap in the flexibility and the financial forecast of someone that decided to purchase versus rent. And when you own a home, you have future flexibility. So you can sell it and pocket the combination of equity and appreciation. You can rent it. You can pass it down to a member in your family. There's options.